Investing Basics. Simple rules for successful investing. Highly respected financial journalist, David Stevenson, shares his rules for successful investing. Investing can be a complicated business. Do I buy this? Should I sell that? Are the bears right, or will the bulls triumph? Which fund works for me? Should I go active and bet on a manager, or should I stick with a simple, cheap, passive index tracker? I've been investing for over 30 years, and have learned 5 very simple rules that I think hold true for most situations. Rule 1. Keep it simple. If you don't have time for very detailed research, make sure you are diversified, and not taking too many punchy bets. Rule 2. Keep costs low, although that doesn't mean always buying the cheapest fund. A smart fund manager, running an active portfolio, might be worth an extra 0.5% over the very cheapest ETF, but never pay more than 1.5% for any fund. Excessive fees will destroy your wealth. Rule 3. In my experience, most active fund managers fail to add much value for those extra fees. That's not to say there aren't great managers, many manage investment trusts, but they are few and far between. In developed, liquid markets such as the US, the chance of an active fund manager beating Mr. Market is very low. So, in the biggest asset classes, I invest in an ETF, and not an active fund. The reverse is true in more complicated, niche markets. Rule 4. Seek dividends over the long term. They compound up, and over many decades become the major source of total returns. These payouts can easily be captured by most fund structures. Rule 5. The biggest gains usually come from concentrated, contrarian bets, where you've done your research and decided that the long-term consensus will be wrong. Timing is everything. You need to wait for other investors to capitulate and sell everything. So, how do these ideas translate into building a portfolio? Here are my golden rules. Be properly diversified with exposure to lots of interesting ideas within both equities and fixed income. Embrace contrarian ideas. Choose smart beta-style trackers which capture dividend growth over time. Never pay more than 1% for any tracker fund, ever. When researching an active fund manager, you should look for the following attributes. The necessary skills built in. There isn't an exam to make you a good fund manager. Inquisitive, hardworking, and ultra-competitive. An independent thinker that focuses on what's relevant. The humility to admit and rectify mistakes. Sticks to a proven investment process even when it is not currently working in their favor. Sufficient experience, having seen several market cycles. Come to DIYinvestor.net to hear from a wide range of fund managers and for much more information.